Hi there, warriors, and welcome to this pre-week analysis where we double down on the NQ and the ES chart for the weekend. I am doing this analysis every weekend, and trying to give you a directional bias for myself and for you for the upcoming week. And we go over some upcoming news and how we thinking about how to raid the market like the Vikings we are. So let's get into it. I think we all can start with a subscribe and a like button, and I want you to, after this stream, comment below and tell me exactly what you think about it and what I can improve to this streams and how we can make this channel more valuable for you. So, E-mini Nasdaq 100 futures. I like to see it naked like this without anything on. So what do my eyes notice right away? It's these equal highs on the weekly that been raided. So we are in all-time highs area, which is always tricky. We have tried to do some Fibonacci's standard deviations projections for longs for higher prices, because we don't pick any tops on the higher time frames. So we try to trade in that direction until we get a break of market structure on the high time frame down. So right now we don't have that, so we are bullish. My eyes go also to pre-week highs. So the last week highs is here, and the last week low are here. This is like the trading range for the upcoming week. We will go for probably one of those two areas. If we are, say, really bullish, we might just dip down to, as ICT clearly give us, the weekly Judas swing. If we are bullish, we are doing a fake Judas down first to then go up. The power of 3. And we have these wicks on the low side and on the upside. So I like to put Fibonacci's on this and mark out the CE levels, the middle levels of the wicks. I also, as I told you, take the high and the low of the last week trading high and low. My eyes also on this chart goes to imbalances, and you can check for yourself what kind of imbalances is salient to you in this environment. We only have one that is nearby, and it's this one. It's a buy side imbalance from this week up to this week. If we are going for those, then we are bearish for the week, and we can very well see a retracement down to this area, and then the target is the low of this week is the first target. Then if we continue lower, it's the midpoint between these levels. But right now, as I told you, we are bullish, so I expect retracements down to at least the week CE of this week, and then we will target the highs here. I can be wrong. We have CPI on Tuesday, so this is only if then this statement. So in this case, it's if we trade down to the week CE, and then we get some kind of confirmation during 10 a.m. news on Tuesday, Wednesday, then we can go long. But if we just started rallying up and we get a small retracement down to last week high, for example, then we might go long from there. So if then this. I will now show you how I have painted this battlefield, as I call it. Here we have the Fair Value Gap, where I don't think we're going for this week, but I have it there in case. I also have the all-time high, former all-time high level here. And we can zoom in a bit to see the last week low here, last week high here, and also the CE level, the weekly wick CEs here and here. So as I told you, my one thought process is that we will retrace in a Judah swing during Monday, Tuesday, down here until we have CPI, and we will go for this high. That's a hypothesis. Please write me in the comments and say how to pronounce that hypothesis for the week. It's one of the cases that can happen. We can also do something like this. We could do a lot of things. And we can also just we'll see. But this is how I think about the market, the NQ for the upcoming week. It's not an easy read at these levels because of the all-time high levels. So we play with what we get, and what we get is on the high time frame we get the nearby PD arrays, and this is the nearby is the wick CEs actually. So for me, the start of the week, the trading range is between the wick CEs, and then I think we will go for either the low or the high, and I'm 70-30 that we will go for the highs. All right, let's check out ES simultaneously. Same thing here. The wick CEs marked out. The high and the low of the last week marked out, and we also have a small little imbalance here on the weekly. So could be interesting, but not for right now. I play with the same thing here as I did on NQ. So all right, let's see on the lower time frames. Check out NQ again, the daily. Can have both of them there. I noted something more here. I noted a little divergence between these weeks. Actually, on the daily, this is not a low. It's like this is the low, so then we don't have a divergence. But on the lower time frame, this is a divergence. So I mark it out here on the daily just to prepare you. And that's a bullish sign, right? In a bullish environment, and we get a high time frame divergence. That's bullish, right? And ES has been the weaker sister, the sixth sister. We use that approach. So if we wanted to go long, we could have chosen the ES for that, because we all thought we will reach the all-time highs even on the ES, which was lagging. So that was the weak sister, and here again we have a higher low on the ES, but on the NQ we have a lower low on maybe on the 4 hour. Let's check out the 4 hour. A little more things to erase here. Yeah, here we have this is a low now. Let's erase this, and here is a low now. Okay, so divergence on the indices. We have made a retracement here on the 4 hour. We can see we went down to let's see if we can erase this to this level, which could be seen as a bullish 4 hour order block. Okay, so we mark that out. Can do it easy like that, and orange for me is 4 hour chart, if we don't talk fair value gaps boxes, because they could be inversions fair value gap. All right, same here, but here we have violated this open price on this bullish order block, but have reached down and closed below the MT level, the midpoint of the order block. Let's see, let's take the body first. No violation here, no close below the MT level. Take the whole candle here. Then we can see we are at and a little bit below the midpoint of this bullish order block. So we shouldn't, if we are not bearish, we shouldn't violate this level. But if we could imagine a bearish start of the week down to the weekly wick CE, then it could be okay to violate this one to then break up later. But we can remember this level and see how we trade around that one. Okay, same here. We are not nearby the midpoint, so we use the open of this order block to see how we react here. So I will be focusing on both indices this week. I used to trade NQ more, but when we have this kind of environment where we have had six sister approach on ES, and we have those stronger lows on ES, I might go for that one this week. We'll see. But yeah, last week I had vacation, so I haven't traded, and I think we have a consolidation week. Nothing to see really. I made this trend line here. I saw 3 point of trend line, and then it was it. I on Thursday I was quite sure we would break this trend line and take out this trend line liquidity, because the algorithm won't have that. So we broke that on Thursday, and Friday broke up a little bit more. So even on the 30 minutes here, we can see we have just worked sideways the whole week actually. So I'm glad I took that week for vacation. I think we also might check out the dollar. The dollar is interesting right now. I think here is the dollar, and I will go to a time frame I don't think you have checked out too much. It's a 6 month chart. Why the 6 month chart? Because sometimes you have to check the bigger picture, right? And we Vikings, we used to go for the long term, the steady sale, the long term raids. So we check the 6 month here, and naked we can see the dollar on the 6 month chart. What do you see? Okay, for the first, we have a down, a really powerful down close candle here before open of this 6 month candle, and we open up, so this might be the wick up to then go lower and attack these lows. I also see this imbalance, which we are going to trade up to. This might be inversion for value gap on the 6 month chart. We also have this wick low and wick CE as a highest point of retracement. If we close this 6 months candle above the midpoint of this wick, I think we are bullish and going for this highs. We also have a 6 month bullish fair value gap here, and we closed this fair value gap. So we are in the nowhere land right now. We could get a reaction. We should get a reaction, even if we're bearish, from this bullish candle. So let's see how it looks in with paint. All right. I have now noticed premium and discount levels. I noted the CE level of this week. So this is line in the sand, and I have noted the 6 month order block here. So I think we at least will trade up here. And the dollar, when it's going up, that's bearish for the indices. So we have to have that in mind. It's not always the case. We are at a 6 months candle right now, so we have to settle a little bit and check out the lower time frame, which in this case is the monthly. Okay, the monthly candle. Right, we have the 6 months OB here, and we also have a monthly inversion for value gap here, which aligns with the low of the 6 months wick low here. So yeah, this might be something to look at, and but we keep an open mind, and we have an eye on the dollar, but we are not staring blind of it. It's more important for the forex, for the euro USD, and so on. So if you are bullish for the month on the dollar, you are bearish for the month on the euro USD, and so on. But if you have any questions on that, hit me up on the DMs or on the comments, and we can go over forex if you like that. It's the same thing, so I can analyze whichever pair you like, no problem. All right, let's just see. Okay, this is old, going up for the wick here. Met the weekly wick CE on this one, and we'll see how we react from here. Of course, if we start reacting down more here, we might go for the lows here, but yeah, we could also, if we close next week above this wick, I think we are more in line with the bullish bias on the 6 month candle, if you know what I mean. Very good, very good. I think I covered everything that I thought I should cover, but I'm open for opinions and suggestions. So hit me up in the comments, and thank you for watching. Don't forget to subscribe and like, and I see you in the live stream tomorrow. Okay, Viking.